What's up, guys? I'll get started in a minute. Hopefully these beats rather, don't get this video taken down because they're listed as no copyright music, and they're actually pretty decent. Just give me a sound check. Sound check, and be good to go. As the last few streams as well, this video will be recorded and re-uploaded in condensed format. So shout out to the guys that are behind my YouTube now, putting out some really nice edited content. Sound is good? Cool. Let's change the screen. Cool, what's going on? How's everybody doing? It is Tuesday. Apologies for the rescheduling. So the power went out this morning, and that's never good. And I was wondering if it was our house, but sure enough, my wife was texting the neighbors, and they said that it was them as well. And then I driving down the road and saw that there was just like a whole team of power line guys redoing all of the telephone poles. So they must have hit something and took my power out. So we're doing a little bit of a later stream. It's power hour, so it's the last hour of the trading day for the New York Stock Exchange. So maybe something will rise up that is worth trading, but ideally this should have been done in the morning, during or shortly after the open, an hour after the open. Anyway, before we get into it, as a reminder, none of this is financial advice, strictly for entertainment purposes only. Also, a shout out to the sponsors of the stream, Bybit. So as a reminder, Bybit is now strictly KYC. So if you can't qualify for the stipulations regarding KYC, regional and geographic, you're asked out. You can't trade on Bybit. I get people messaging me all the time. Hey, how are you sharing Bybit? I'm sharing Bybit, right? They're a sponsor of the stream. If you live in the United States, you can't trade on Bybit. Me personally, I don't think there's a whole lot of incentive to trade crypto, period, right now. But keeping my feelings aside, just shout out to them. They still have some incentives going on right now with regard to bonuses and whatnot. So those links are below, or that link rather is below. All right. So I'm going to just keep this casual, honestly. I'll take a look at the chat from time to time, talk about, I don't know, just my opinion on markets right now, how I'm trading them, how I'm not trading some of them. There are some things worth pointing out, being that today's Tuesday, yesterday was a holiday. I'll go over a BTC setup that is still on the table. The last time I streamed actually was all the way back here. It was actually on the that was the 2nd of October, because that was after we had this big markup, short squeeze, long squeeze, and this day hadn't even transpired yet. And my guess was that we were going to have another inside value day, be within balance, and we would retest this POC. And I mentioned that as being a good short opportunity. It came once, it came twice. So here we are. But there is actually what I think is a somewhat decent long opportunity. You know, whether or not it's even worth taking in this environment, I don't know. That's up to you. I've been focusing on the NQ. I trade a little bit of oil, but oil kind of fizzled out. I thought we were going to have a bit more of a move in oil because of everything that's taking place geopolitically. Not going to give my opinion on that. I've made a mistake getting roped in on Twitter. It's so easy to get roped into the conversation. But I just think that right now, what I'm starting to see is that there's probably going to be a ton of propaganda. I am not well versed in anything in the Middle East, anything between both parties, right? Not even going to mention names. Obviously, everyone knows what happened in Israel. But I'm not qualified to give a really thorough opinion. My opinion is something that a lot of people can probably share in terms of the sentiment around anything with regard to children above everything else, right? Harming children, I mean, you could throw anyone who harms children in a meat grinder for all I care, and I would be happy to press the button. But outside of that, I'm not qualified to give much more of an opinion. Anyone who harms children, in my opinion, deserves to be destroyed. I guess that's the best way I could put it. That's not putting it lightly. So we'll get into the market, though, because all those things, obviously, there's possibly some more volatility on the way, depending on how this continues to transpire. I mean, anytime there's a war, markets hate uncertainty. So, I mean, it's pretty certain right now that there's a war. But, whether or not any kind of peace talks come up, these things like these, it's unfortunate that we're like talking about this in a way that, hey, how can this be advantageous to our trading and us making money? I personally don't feel really good talking about it right now, so I won't get too much into it. But I would just say that there's a lot of things right now that are, and your feelings change when you become a parent, like 1,000%. I would just say that there's a lot of things that are potentially on the table to create a lot of action in markets. And outside of everything that's taking place geopolitically, tomorrow is a pretty significant day. We have core PPI. We have the FOMC meeting minutes. Those are at 2 p.m. This Thursday, we have CPI, right? And yeah, so that's two back-to-back days, Wednesday and Thursday, with economic releases that should lead to some short-term volatility, at least in equities, at least in legacy markets. And again, I've been trading mostly the NQ. So for me, that's something that I'm looking forward to. All right. So real quick, we have 23 minutes left in power hour. I had a really good day today trading the NQ. I was down briefly and then just was able to hammer it on the way back down. So we'll take a look at the NQ because I think there's something worth pointing out. And the things that I go over, these are going to be relevant to crypto as well. So this would be relevant to trading, I would say BTC. I don't think it would be as relevant to trading altcoins. But I guess just some concepts, just some things to think of. So in particular, looking at the NQ. So if we look at high time frame wise, so first I'll go to TradingView and just look at a high time frame chart. Just looking at stocks rather. So I've been talking about the 4,200 level for a really long time now. A lot of people have. It's not like there's anything special about saying that the market should come back down and retest this level. So I mentioned this morning that I don't think that we've seen the extent of the retest. I don't know. I mean, to be honest, like I would expect that we would get more of a probe. Like I was talking about 42.5, so 4,250. And again, we're looking at the ES, but talk about the S&P. They're obviously not going to be the same exact price, but more or less what I'm talking about is retesting a little bit lower down here, cleanly around 4,200. I think the deepest we got was like right around 42.37. So do I think that that's it and that stocks are just going to continue to march up from here? I don't get that impression. I mean, the move last week in oil was pretty wonky. The moves last week in rates were equally wonky. So I don't think we're just going to get sort of a one and done test of this level. Going back a couple weeks, I'd said I think the market's about to build its next base. So base, or I don't know if I said base or platform, same kind of idea. So idea is pulling back and having, a period of weeks, if not at least months maybe, of the market basing out, building, a new area of two-way trade, and then cleanly leaving that to continue upwards. So this is like the first major test of that level. And again, this level was established going back to May of last year. So I don't think this is it. I think that we're due for a little bit more of chicanery back down around 42. And like I said in the last stream, I think this doesn't necessarily just mean 42. Like, I don't want to talk about it like things are that clean. It's 42, 41, all of that is more or less within play. I don't think it's that necessary to go over high time frame equities or equity indices, because obviously the market is not as correlated. One thing that I will just like end this brief conversation about the ES on is, yeah, the markets are decorrelated with crypto, but when I say markets, talking about crypto and the S&P and NASDAQ. Yeah, they're decorrelated right now, but if we do have anything that's a major spillover and causes a ton of volatility in legacy, if we see 42 go, 41 go, and there's really no turning back and there's no significant sign of strength there, when you have like multi-sigma moves in equities and really strong moves, then we start to see just risk respond, right? So if it gets ugly, that's obviously hear that a lot. If it gets ugly and doesn't mean anything, is it going to? If things start moving very quickly though in stocks, I think that correlation would come back. They're not right now, so other than volatility being up, VIX being up, it's not really that ugly. We had a significant bounce off the lows. I think 42, 41 is probably going to be well defended, honestly. You have a lot of options underwriters and hedgers that are going to be buying back their stock, and people that have bought insurance sub 41, 42 not being in the money and those expiring. I think there's just sort of built-in volatility. I think there's built-in mean reversion around this level and just built-in bid. Best way I could put it. So I'm not really swing trading equities. So I bought QQQs, ended up flipping that position. But if we do get down and we start really testing this level, I'll probably start picking up some longer term swing positions again. Most of my attention has just been intraday. So getting into something that is worth pointing out. So yesterday, just the last couple of days, if you look at the last 3 days in the NQ, the things I talk about right now would be the same. The concepts and the way of looking at this would apply to BTC as well. So it's not like what I'm going over is lost on anybody who's maybe using a TPO chart or using order flow to trade BTC or ETH. So if you look at the last 3 days, so Friday and then yesterday, you have thin structures, right? So we had a trending day on Friday, strong move off of the lows, outs out of a multi-day balance. Yesterday, volume built up at the low, strong move off of the lows. You have a double distribution. So if we open this up, it's a little bit clearer. So today and yesterday started relatively the same. So basically the same exact activity. So overnight session was really tight. So all of this is the overnight session, and then regular trading hours. So off of the open. So after 9:30 a.m. Eastern time, market just kind of one way, just rips upward. Yesterday ended up holding the highs. Today ended up trading back into the low volume area. But one thing to point out is when you have a buildup like this and things are really tight. So one thing that's worth pointing out right away is that the market usually puts in the low or the high within the first hour of the day. So talking about the market, talking about the S&P. So this is a microstructure. This is something that would be considered a microstructural detail, something that's at least worth knowing. Okay. So the high or the low, more often than not, you're going to see them put in within the first hour of trading. Okay. And this is the first hour of RTH, so regular trading hours. So overnight, though, we had the market in both cases. So that's why I was saying it plural. Stuck within a really tight range. So off of the open, if you see something like this leading into the open, market is stuck within a really tight range, really compressed. It's not really in your best interest to go ahead and fade, especially when we're trading within a prior area. There's a low volume node holding that level. Market attempted to trade back within a prior composite, all of that, holding that previous resistance turn support. When you see that and then the market ends up breaking outside of that compressed region during RTH, so during regular trading hours, it's not in your best interest to fade that, right? Especially when you have strong buying activity, when you see sort of one-sided order flow. So in both cases, both days ended up the same. So we had a really tight overnight session. You can imagine in a tight region, the same way with BTC, you're going to have a buildup in positioning on both sides. And when you have a strong move that's confirmed outside of that range, in this case, you had 2 attempts in both directions. When one side is finally chosen and the market accepts through that level, so in this case, the levels are clear. It's right around 1540, and the other one was like 14,980. Acceptance through that level, you're just going to be targeting the next sticky point. So acceptance through the overnight high, acceptance through that level, targeting Friday's highs, and you're looking at a market that probably put in at least a short-term bottom. There's not a whole lot of stickiness ahead of it. So the same thing happened this morning. Same thing, very tight overnight session. Just looking at like what you have in ahead of you, there's not much that stood in the way. So you have on the way back up, you have pretty low volume regions to trade within. So it's kind of the same concepts I go over when I'm talking about BTC reaccepting into low volume regions, trading from one sticky point to the next, trading in those thin areas and it not really making sense. Sorry, itchy ankle. It not really making sense to stand in the way of that. So this is a bit of a better picture because this is my composite TPO chart. We talking about yesterday breaking out of that thin region, but also holding a prior support level and a prior composite. You're looking at multiple weeks of trading at the lows, retesting. This is the NQ, so the NQ didn't have the extent of the pullback that the S&P did. Not in percentage terms, but in terms of market structure, it's clearly well off of the range that it came out of. But multiple days, weeks of build up, break outside of that structure. So we're just talking about compression after a breakout of market structure, holding a support level, and then going in the direction of that breakout of that compression, so of that overnight level. On the way up, nothing really standing in the way. Sorry, I'm kind of getting a little dry mouth. So as far as the NQ goes, I was trading within these two regions. So we have 15,364, 15,279. So I ended up longing acceptance back within there and capturing a pretty nasty meaty short on the way back down. I know you guys probably don't want to hear too much about the NQ. But as far as it goes right now with the S&P, I think this is something worth pointing out. So the NQ even as well. The same way that I expected 42 to get retested, I think you're probably going to have something like this. So we probably retest that 15,450 level. So we're kind of accepting back within a prior composite right now. We probably get a sweep of these highs, and then I think we end up back down here. So if you're trading the NQ, I think that the next really decent support test, long opportunity, if you're looking at least at some kind of swing position, would be back down around this composite down here. All right, let's not spend too much time on this because not a whole lot of you guys are, I'm sure, trading the NQ. Very briefly, though, we ended up trading back within today's gap. So we're filling out that gap a little bit. And it kind of looks like we have a little bit of absorption here right around 15,279. So we tested the high of that level. So this is the box that I marked out prior to the trading session beginning. Tested the high, traded through very quickly on the way back down, a lot more quickly. And now when we're retesting that level, you can see that CVD is a little bit more down. So it's subtle, but making lower lows and prices relatively flat. So again, my opinion is that the NQ kind of presses back up and retests that high. A lot of times, guys, to be honest, I mark off my levels in the NQ. So let's see if I still have them. I will look at this chart in the morning or overnight, mark off my levels, place them on. So I don't even have it. I deleted this morning. So basically what I'm doing is I'm taking the levels that I delineate on my Sierra chart. I'll just write them down. And what I'll usually do is wherever price is right now. So I will put like NQ here, current price. I won't write the price, but I'll place if any level is above. So for example, earlier this morning, 15,279 was a level that I had as a sticky point, and then my levels below were 15,162. I'll place that there. And then I probably won't even look at the chart much more anymore. I'll have it off to the side if any kind of really obvious divergence to show up on, like price progressing for some time and CVD showing a clear divergence. Otherwise, I'm leaving this right next to my DOMs, and I'm not really looking at the charts much longer. This morning, for example, we had before we broke out of that overnight compression, there was a really obvious poor high. It was a poor low and a poor high. So I figured we were still going to trade higher. So that poor high was a priority for me in terms of a target. So we had some trading around the POC, overnight POC. As soon as we started claiming that POC, I just targeted the high. So even if we were just going to get a brief swipe of it, the point is I had those levels all written out. I know what levels are above or below, and then I'm just placing this notepad right next to my DOMs, and it's honestly just for me to quickly look at it. And remember sort of where my levels are. There's some DOMs that, for example, you could label your DOMs. Jigsaw, you can't label the DOMs. So for example, on like Sierra chart, I can mark off the levels on the DOM. Maybe I haven't figured out Jigsaw's setup yet. I can mark off the levels on the DOM and then write sort of notes on them. But this I have to do with a little notepad to the side. Let's actually see where we are, so I have it on a 1000 volume chart right now. Usually off of the open, I'll have either anywhere between a 100 volume or 100 tick up to a 500 volume or a 500 tick. And those two things are not the same, by the way. My latest setup is 100 tick, 500 volume to switch between those low periodicities. As things slow down, I will increase that, and I'll move up to my 1000 volume or use like a 1 minute chart or something roughly similar. Yeah, I think this is probably going to end up, we haven't got the extent of that retest for the, we did get a retest of the opening range. So this is the opening hourly range. I could see us coming back down, retesting that, and then moving up, but I don't know. Nothing stands out clearly. Nothing's, excuse me, getting a little tongue-tied today. Nothing is clear to me right now that's worth taking 10 minutes into the close. Sometimes there's some good setups 10 minutes into the close. You got a lot of volatility, and if you're just scalping the DOM, it's great. Probably not going to be easy to do that during the stream. I'm going to go over the BTC setup I was talking about. Just want to keep an eye on this. Because if we got something like this right now, something quick, I would probably look for a long down here just to play back into the meat of the structure during the stream. Otherwise, I think that honestly, if we're building this value here back within this profile, right? I think that one, the market is slowing down a little bit on the way up. Yesterday was a really strong move. We didn't trade back within that gap. So market is slowing down, but I would still look for something that if we traded back above like 15.3, I would look for something in the direction of this brief area of value. It's not really value, so I don't want to say that. Just this little consolidation to play at that high again. So 15.3 looks like the market's going to drift lower into the close. If we get something with some time left on the board, even though obviously futures will continue to trade, maybe we'll get a swipe of this, and then we could place a quick trade around that. I'll keep this screen off to the side just so I could keep an eye on that. We'll go over the BTC setup I was talking about. Just a couple thoughts. So it's funny because there's a little bit more doom and gloom around ETH lately. I shared someone's post yesterday, someone who's a pretty well-known person within crypto, talking about, I guess the conversation is around how a lot of things that are part of ETH have either failed or are in the middle of failing, and ETH is back to being inflationary. DeFi, obviously, everything in DeFi pretty much being a scam for the most part. Not necessarily the case, but kind of just giving up on ETH for a bit. And ETH is in one of those places where I would more or less start to expect this. It's not in an area, so against ETH BTC, it's not in an area where I think it's in the most advantageous to buy yet against BTC. I would start paying attention to ETH around this 0.05 level, so around this swing low. And honestly, let's say that a BTC ETF is approved. I think that, the time a week out of that is probably a good time to start paying attention to ETH, right? When everyone is jumping into BTC, when everyone is focusing on BTC, I think that kind of adds up more. It would add up more or less to a good time, a good point rather, to look for strength in ETH and for this ratio to improve. But I mean, it doesn't seem like there's a lot of structure in the way, honestly, if ETH was to continue lower on just the USDT chart. So, one sec. So streams later in the day, I just noticed that I'm a little bit more fucking tired, honestly. So excuse me if I'm taking a second to even find my words. But from a market structure standpoint, I mean, I've said that the cycles look somewhat similar in terms of time symmetry. If you look at ETH, I mean, what areas stand out below us? The next major level, probably around 14. So if we don't find an immediate response, let's say the market's, ETH swipes these lows locally, we don't get an immediate response, I wouldn't expect it to find any kind of significant bid until around 14. So who knows where that is on the ETH BTC chart. But it is still worth paying attention to that chart. But I mean, you have, for example, the ETH Foundation selling yesterday, not anything crazy significant, right? I mean, $3 million worth of ETH is kind of a drop in the bucket, but there's been, it's historically a pretty decent hit rate. They sell, at least interim tops. The last major top, and I posted about this, was when they sold 30 million ETH. And people were saying, that's not a lot, it's not a big deal. And that ended up being the top for months. So you have to wonder why they would be selling anything. And if obviously, I think that level is so insignificant to worry about. It's just market structure on its own is doing a pretty good job of communicating the overall weakness. BTC outperforming ETH very clearly. As far as BTC goes, nothing really changed since my last stream from this setup, right? So I talked about how, if we had this major long liquidation, we traded back within that, didn't lead to continuation. So if we're starting to base out, you're just going to start retargeting that high. We've gone over that already. We talked about this setup. Honestly, BTC looks weak to me, right? It's still, I still think we have this structure holding. I think we're looking at a lower high developing. I don't think we've seen the extent of the pullback. I think during the last stream, I talked about how 25 and 24.5 are going to get retested again. That doesn't mean that's the extent of the pullback. I just think that's there's a very significant chance, there's high probability of occurring that we see 24.5, 25 retested. I don't think it's off the table for us to retest 22, 23, or any lower prices, honestly. The market is not showing signs of strength right now. This kind of looks like distribution. It takes a long time, especially after we've had, quarters of the market moving up. You got to remember, year to date, I mean, it's not abnormal for, so year to date, BTC is up, 50%, 60%. This is a really good year so far. So anything coming back down to, let's say, 22, 23, that wouldn't be out of the question. So in terms of just percent pullbacks, what does that leave us with? So even at a 50% pullback, which is not uncommon, is actually very common. So the market closed. So NYSE closed, and we didn't really get any kind of crazy spike or anything lower. It's very common for this market to put in 50% pullbacks, right, for major moves. So, I mean, 23.6, that really shouldn't scare anybody, big picture-wise. I think the way it looks right now, I think it does look like distribution. But, again, it took a while to make its way up. Distribution takes a while as well. And, yeah, I don't think I don't think that means anything though. Big picture, I think we're still kind of. I think you still want to buy BTC into the halving. So I guess the best way to put it, as I said during, I said last week maybe on Twitter, I don't know what price we are at the end of 2024, but I'm really certain that we're going to be higher than we are now. So I'm very confident that prices are higher than where we are now. I think that everyone's kind of forgotten that we could still trade, and I'll go to that lower time frame setup in a second. We could still trade within. There's no rule that says, like, everyone just thinks of either lows or all-time highs, right? I mean, we've been carving out this lower range, but don't forget, like, we could trade back above 33 and spend a lot of time equally above 33 into this prior range and still not make an all-time high for a long time, but still have a very significant appreciation in prices. I think it would get quite responsive and reflexive above 33. I think like you can't be bearish above 33, considering the amount of time we're spending under it now. So like, let's say, you know, market's consolidating and then we're above 33. I think you have to target much higher prices at that point. You have to look at least 40K. But that wouldn't mean like that it's just a straight march to the all-time high, right? You would be very mistaken to think that. Has it happened in the past before where we've reaccepted into massive ranges that we, you know, created prior to bear markets and then it just kind of been up only? Yeah, but I just think you have to obviously be a little bit defensive and not be overly stupid, you know, buying into. I guess the best way to put it is, if you don't own any BTC, like if we end up hitting 40K, you're going to be in a really tough spot. You're going to feel forced to buy because you're only going to think that at that point, this thing is on a one-way path upward. So anyway, high time frame hasn't really changed much. I think, again, we're going to be going lower. The low time frame setup that I was sharing, that it still could be on the table. I think it's right here. So a couple things. So I'll actually open up the chart book on Sierra chart. Pull this over. Okay. All right. So from a market structure standpoint, I got a little bit of a gap here on the Binance chart. I was talking about a confluence of levels. That is not the BTC TBO. I was talking about a confluence of levels. So there's a couple of different things. So one, the weekly range so far. So the Monday open, you know, Monday low right now is the weekly low. Okay, so we're talking about yesterday's lows. This is a pretty common setup. So either move through Monday's low or move through Monday's high. If there is sort of a confluence of either market structure or other conditions, this setup is obviously strengthened. But a lot of times what you'll see is that we'll make the low, or in this case the high, and the reacceptance back within that Monday range offers at least a decent short-term trading opportunity. So in this case, because of the way the market is set up right now, you have a bunch of lows right here. This is the daily chart. So this is a combined profile of multiple days, by the way. So under all merges. So this was a composite. So 3-day composite. That composite value area low that I was talking about. Prior composite highs. So this is like a little bit of a market structure flip right here. You could see it more clearly on this daily chart. But the Monday range setup is strengthened by that. So some of you guys might have heard Tom Dante talk about this. There's a couple other price action traders that talk about this. If you hear someone talking about either sweeping the Monday high or the Monday low, just remember it's also the weekly because it's part of a new week. So putting in the weekly low or the weekly high, essentially. If you don't have a wick on Monday, whether Monday closes at the high or Monday closes at the low, obviously I'm sure you could assume how you might strengthen one side or the other being taken. You know, it's very uncommon for a daily high to be at the close right, or a daily low to be at the close, and for there to be no shadow or no wick or no probe. Probe either beyond the open, right, or beyond the open in that case. So for example, if your daily was left like this, right? So this is, let's say this was the open, right? And the daily is left like this, right? So the high and the open are the same. So this is immediately going to stand out like a target. And the same thing would happen if you know, we had a candle like this, where this is the open and the market just was like one-sided on the way up. A lot of times this level is going to be a target. We're going to look for that level to be returned to, cleaned up, and then some kind of mean reversion. So my point is, there's a host of confluence down here between the composite value area low, then you have daily structure, you have a prior composite value area high, you have the Monday setup potentially right here. And what that would look like is us from where we are right now. So you see we're building volume at this low. The way this is set up right now kind of looks like a puke is going to come. Inside value, you have an inside day as well. So that's another thing. If today closes like this, we have an inside day. We have inside value. So inside of yesterday's value, if we get something that takes this low, right? So takes yesterday's low, trades back within value. So right here. So retrading back above, honestly, if we end up taking, so let's say we continue down and we take yesterday's low, you're probably going to see this POC because a swipe of yesterday's low probably comes with a bunch of people bailing into, you know, bailing out or bailing into shorts. You'll see this POC migrate down. So honestly, that POC might end up being a decent trigger for the setup. So let's say that we take yesterday's low, because we are favoring it right now. We take yesterday's low. As we're moving down, we're bringing more volume into the market, right? We're seeing more people trade. It's going to bring that POC down. If that POC shifts down, we take yesterday's low, and then we're trading above that POC, you probably could just target the high of this composite, right? It's the high of this value. So, you know, 27.7, 27.6. So your setup would be something like, here is, put on the 1 hour chart. Your setup would look something like this. Swiping this level. After that, you probably bring that POC a little bit lower. I mean, you could even use this low, right? So this little consolidation here. So if we have a puke, take that low, and then we're trading back, let's say above, it is 27.3. There's not a whole lot of structure on the way down, so you probably slingshot back up to this high, right? I mean, you don't even have to worry about considering it like a Monday setup. If you just consider that the market is in balance right now, and you have an attempt outside of balance, right? And then you re-accept within balance, you know, maybe we continue to move sideways a little bit longer, and the more likely thing to do is to trade back up within value. Obviously, you want to strengthen this setup. You want to see that shorts get trapped down here. You want to see that there's some kind of absorption after the fact. So swiping the low, trade lower, but now as price is reclaimed and slightly higher, you're seeing that sellers are getting absorbed, and, you know, the bid is replenishing, and all those signs of strength that you would look for. I mean, if that doesn't happen, I think that probably happens. I think that we probably put in I think we probably see a move like that. But if that doesn't happen, let me extend this. As far as levels below us, you know, the next major sticky point is probably this. So imagine we break below these lows, we don't get a response into this region, and you have a lot of lows to swipe. So this can even come all the way down to 27.97. If you don't get a response there, and you would want a really significant kickback there, you would want something violent. If you don't get that move there, then, you know, it's probably coming back down to retest this naked POC from that composite, and more likely coming back down to test 26.8 and where these highs and that value area low line up. So no response underneath yesterday's low probably leads to a puke. It's probably something that blows out spreads and liquidates a good amount of longs because you haven't had these lows taken yet. So I could see that being some kind of exhaustive move through there. Just looking at this from a more zoomed out view. I mean, be careful though, because like I said, I think that this is coming down to retest 25. And, you know, if you look at this whole area as a composite, and this being sort of the SR flip that needs to hold, but you've already gotten worked by this weekly level right here, I think that we are looking at something that does come back down through there. So, you know, it's reasonable, honestly, to be short BTC here. To be swing short, a stop above this high, and targeting, honestly, something like this 26 low, at least initially. Because I think you've seen a reoffering right here a little bit sooner. So this was the extent of, so we filled out this gap. We got another move through there, retested that level, and, you know, sellers stepped in. Sellers were squeezed out, longs were liquidated, and then on the move back up, you were reoffered lower. So sellers stepping in a little bit sooner. So I just think this probably does something, chops around. Maybe you do get that move up, right? A brief spike up to what I say, 20. What was the level I said for the intraday move? Yeah, so you zoom out to get a little bit more of a clear idea of what scale that is anyway. So even if you do get this move, right? I think you're still left with something that ends up coming down here either way. You know, lows uninterrupted. It's kind of ripe for some kind of cascade. So yeah, if we end up taking that low, I think I see your comment, Asgard. So we swiped yesterday's low, and then yeah, 27.7, 27.6 seems like a reasonable target. There's really no reason, if this is bearish, that it should be back above 28. So 28 more or less should be doing its job now. If we're back above 28, I mean, you're probably going to look at 30. Some kind of squeeze through this level. Just consider, you know, these concepts are same intraday. Multiple days of balance right here. That was what we're rejecting off of. If you're accepting into that, so if we're starting to consolidate and we're back above 28 and the market's marching up, you're into an area that rejected price and it's not really getting rejected again, then you just have to start looking higher, right? So above 28, you'd look at like 29, 29.5 at least, but maybe you'd get some kind of exhaustive spike up to take these highs. I don't think that's the case. I think this is chopping around and then we're going to roll down. And on this chart now, I have the weekly value and just daily profiles. So you have last week's or 2 weeks ago, that VWAP right around 26.6, 26.7. Sticky point right here between 26.9 and 27.1. If these lows don't hold, I would anticipate that you come down here to take these out. So, I mean, I'm saying I think it's going to go lower, but I'm just pointing out the areas where I think it might find some kind of stickiness on the time, in the time being. Areas where you might want to, you know, either take some off or begin to look to add more on, right? So if we end up breaking down, after maybe we end up doing that, breaking up, taking yesterday's low, breaking up, chopping around, breaking down. If we end up re-tagging these lows and you get some kind of bounce, maybe you want to look to add to any kind of short position or at least manage a position. Yeah, I mean, ETH. The last thing that ETH wants to do is accept below 14. I mean, this yearly open is still, it still stands out, right? No wick at the yearly open, no real wick. Similar to the concept I was just talking about earlier, when I was talking about it for the daily. January's open essentially being the low. Very uncommon to leave that behind. The last time that we left something like that behind on a monthly or on the high time frame, we ended up coming back to it, and that was back here. That was as close as you can get to really no movement beyond the open, against the open, and then recovering. So I could see the NQ chopping around here even more. So we're back within the range. No real drive lower into the close. I mean, I wouldn't want to be in position right now going into the next 2 days just because of the economic releases. But like I said, I think I don't think the extent of the retest for the S&P is done, but I don't think it's necessarily done moving up either. So S&P is already back above, or the ES is back above this major area market structure. You don't really have a whole lot in the way now until we get back up around like the extent of this gap. So if we look at the S&P, so right around 44 for the S&P. So there's a decent amount of clear skies if buyers continue to show up. If you have some favorable releases in the next 2 days that lead to more covering and more aggression by buyers, it doesn't have to turn yet. I'm just going to look through the chat real quick. BJJ is really good, Asgard. It's awesome, man. I can't do it enough. I'm like, I was going through a period of like I can't actually. It's funny because I'm about to start talking about an injury, and right now I'm like definitely my neck is cranked. I wrestled and grappled for a really long time. So when I got into Brazilian Jiu-Jitsu, I was really excited. Things were coming back quickly, but I just have to figure my way out again, and that means everything. It means like being limber and stretching and working out for BJJ rather than continuing the same exact gym routine I've had for the last couple of years. And I definitely either didn't stretch enough or whatever it was. I hurt myself the first 2 weeks. I think I either pinched a nerve or I was having a cousin work on it because he's a physical therapist, and he does massage therapy. So I was having him work on it, but I must have pinched a nerve, right? My arm was fucked. So I got over that, and then it's been great. It's been awesome. But then I'm realizing like no matter what, it's like every week you have some kind of new ache or some new pain, and it's all good though. I love it. I'm obsessed with it. I can't go enough. That's where I'm at. I wish I could go a lot more, but I'm running into that wall of needing to recover and maybe even just I have to figure out that part of it better, right? So that I can go more. In the beginning I was like, I wasn't even eating properly going into it. Like I would train in the morning, but I would train too close to when I was eating, and I was eating like a heavy breakfast, and I'm wondering like, why do I feel like shit? Like I can't be this out of shape. And it was really because like I was rolling with like a stomach full of like oatmeal, protein, peanut butter, coffee. And then finally, accidentally last week, I realized like my best sessions are when I don't really have much. I have a macro bar, a tortilla, a white flour tortilla, and a banana. But I'm obsessed with it, man. Yeah, I would be worried about, you know, any more weakness in stocks, bit like large moves in terms of stocks down because BTC has been weak for the moves up. So it's just continuously, it is decorrelated, but it's also much weaker. I mean, people mocked me for saying quarters ago that I'd be more focused on stocks for this, for the next few months than crypto, but it's turned out to be the absolute correct thing to do. I think I think this is going to continue this way, and we have to look closer to the halving for better results, or after an ETF approval, which I still think gets sold at least in the short term. It's good long term, but I don't anticipate the market to like move to new all-time highs off of that. I don't bias too much of my ESNQ trading against the dollar unless the dollar is doing something really, abnormally strong in either direction. Otherwise, I focus intraday on the NQ, and I'm scalping most of the time. So unless it might affect more of my swing positions, um, but I don't really focus on it too much. Like if the dollar, for example, is at an area of high time frame support or resistance, then I'll be more mindful of any kind of swing positions in either. And it wouldn't be in the NQ. It'd be like I'd be picking up positions in the QQQ or the SPY. um, it's tough. I mean, long term positions are tricky. So, I'm not sure. This is this geopolitical event. That's what I'll say. Is a major curveball for markets, right? In particular, crypto, because it's possible you could see this get spun by governments, that terrorist organizations are using crypto, so they have to do something. Just imagine, let your imagination run wild. We have to sanction exchanges, or um, close off fiat on ramps for the United States. You could think about how this could be used, right? So it's never good. So I'm not certain. I'm certain about more uncertainty. Put it that way. This trading view indicator is SVP, so session volume profile, and then just a VWAP. So as far as monthly candles needing a wick, I think maybe I got that comment after I went over it. Yeah, I almost always on all time frames, not all, but I'll say going down to the hourly time frames or 30-minute time frames, because that would be more like having a poor low or poor high. I almost always want to see a probe past the open, right? If it's on the weekly, if it's on the daily, if it's on the monthly, if it's on the yearly, it's something that I will mark off. So especially if, like, let's say, for example, is good condition, apply this to the weekly or monthly or, above, but consider that the time that passes between is probably going to be much longer. If we're talking about like Monday opens, weekly opens, if the weekly opened, right? So this is the current weekly open. So we're within, yesterday's range. If the weekly opens and it's one-sided, right? So Monday opens, for example, and I went over this earlier. So had Monday opened with no wick, right? So either, it opened here, we didn't have that wick, and then continued down to where we are now. That's going to be a target for me, right? More often than not, that's going to be just an area I have marked off, right? So either it might be for a target in the direction of that. So for example, this particular setup, so imagine we didn't have any kind of move above the open. If we take Monday's low and then we're trading back within that range, then I'm going to be targeting that as an area to take profit. If we hadn't moved lower and we didn't have a wick at the high at the open, and we're drifting up, that's probably where I'm going to be looking for some kind of stop run or potential short opportunity, anticipating that, that'll be cleaned up. So yeah, it does. It's a similar idea with high time frame as well. It's just very unlikely you leave something like that behind. So whether or not you consider that a target, though, for a position you're going to be in to take profit, or potentially an area to enter, that depends on the situation. So mobility, I just started doing more yoga again. I started doing a lot more stretching in the morning. I do ice baths, right? That's not considered mobility, but I get my blood tested frequently. I do that myself. I've just started to be more conscious of these things, since I've always done ice baths, like for not always, but done them for a while. But I got back into yoga after getting back into grappling, feeling like I need to. Yeah, but white flour, I think is like faster acting, right? In terms of being absorbed and being able to be used as fuel. So I'm eating the flour tortilla like a half hour before rolling. So yeah, Cred probably has a video. I probably have a couple videos out there where I've gone into this like in detail, and not after just seeing someone ask a question about it, but I put a few videos out where I've just talked extensively about this concept. So you have inside days for ETH, inside day for ETH, inside day for BTC. Let's see, inside day for Solana, inside day for WorldCoin, inside day for Link. So these are all things worth noting, right? To reiterate that setup. So this setup is decent today because we have value overlap. But the optimal inside day setup is when you have, for example, let's imagine that this is yesterday's candle. Here's today, right? These are within balance, okay? Today is fully engulfed in yesterday's range. And what we look for is, upon today closing out, we look at today's high and low as being a potential trigger point for a trade to the prior day's extreme. So in this case, forgetting all the earlier setups, if we're just going to talk about this as an inside day setup, let's say this closes out in 3 hours. We'll box this off. Let me get rid of the profile so it's a little cleaner. Get rid of the VWAP as well. So yesterday's high and low. And now let's say that this closes out this way. Today's high and low. Change that color so it's a bit more obvious. So here's an inside day setup, right? And this is a pretty useful setup for BTC. And I would say more liquid alts as well. So inside day means you're within balance. You're usually going to be taking the setup. The best setup is best when it's a setup that is within balance, sort of like this down here. So these 2 days are very much in balance. That's an inside day setup. This one ended up taking you to much further extremes, but the inside day setup is a break from balance. So go on my YouTube course and just look at break from balance setups. The same concept. So how you determine the targets is going to be dependent on context and situation. But let's say today finishes out like this. Here's your high. Here's your low. In this case, if we have a false break through today's low, so a failed breakout. So let's say we open, here. Tomorrow we trade back down through the low, and then we're reaccepting back within today's range. Then you're just going to be usually targeting that prior day's high, right? So targeting this high in that case. If let's say, for example, we don't even get that. We open up, open down here. We don't trade lower. Instead, we start trading higher. You could look for the failed attempt through this level, but a lot of times the setup is going to be accepting through that prior day's high and trading toward the high, the structure that it's within. So this high, right? So accepting through, yes, it's today because it hasn't closed out. But if we close this out and we trade through, today's high, accepting through there, we're a lot of times going to target that prior day's extreme. So the setup would be, break above and acceptance through 27.74, short-term trading opportunity to 28, right? Nice round number. The downside setup on a breakout, wouldn't leave you with a really far target, right? You'd have open, trade through this low, and then if you're just going off a textbook setup, you're looking at that low being swiped. So this is in this context, I think it'd be better to sort of look for that Monday swipe, right? And then possible reversion to trade back through. But I've gone over the inside day setup, I think, more often than I could count. Yeah, go ahead and send me those exercises, man. I'll definitely take a look. That's I don't know if you guys can probably hear my wife on the baby camera. I'm just thinking, is there anything else that's worth pointing out? Open interest quite elevated after this rotation down. So, you could see funding up. Imagine it's both sides getting committed and buying, longs buying this dip, thinking that this is, a good dip buying opportunity. I think another thing worth pointing out, though, is that if we look at just like annualized basis over the last couple days, look at Binance, it is up, right? So if we look at from, for example, the 8th to where we are now, so again, this is not something that's going to have a funding rate, but it is worth paying attention to because a lot of times we'll talk about this at lows being in either backwardation or being flat. This is still elevated, right? So it still shows that, again, today is the 10th. If we go back to the 8th, just giving you a clear idea of we're higher, right? So 8th, 10th, that is increased. And the reality is price has actually decreased. So, this is something that you would want to see come off, right? A lot more before getting in position for, much for longer term long positions, swings and what have you. You want to see that get more washed out. It never really came down as much as I would like it to. It's still quite elevated. And it's just an indication that you've had people get into position here, again, paying that premium, buying, quarterlies, and for that positioning, the market hasn't moved higher, right? The market is still moving lower, so it's an indication of potentially some more trap positioning in those futures products rather than just looking at perpetuals. I think that'll cover it, though, guys. Sorry that the stream had to be rescheduled. It would have been nicer to do this in the morning. And my intent this morning was basically just to be on this screen and talk about the levels, but watch this and chat. And instead, we got into one of these recap style streams, which I really don't care for because talking about levels that were, not near or while things aren't really happening is never really that exciting as actually trading and talking about it. I think that'll cover it, though, guys. It's an hour after we started. Go ahead and hit the subscribe button, hit the like button. I will try to get a morning stream out again, maybe the end of this week or weekend. And we'll try to just have a stream where, I'm talking while just trading. Again, I'm not actively trading crypto by any means. If you look at alts, they're like in the same spot we left them over a year ago. And I don't think this is going to change yet. There's no reason for it to. There's no new retail push. So, yeah. Anyway, tomorrow and Thursday should be pretty important days for legacy, and maybe we'll have some nice volatility from that. I guess to recap, overall, I think BTC is going lower. So, all right, guys. Until next time, the stream recap, that'll be out hopefully within the next day. I forgot to record this, so it's probably going to take some time. They're going to have to rip that off of YouTube. But yeah, have a fantastic evening.